Can you contribute to your work 401k and also contribute to your IRA in the same year? Is that allowed? Hi, I'm Julie Merrill. I am a CPA and I thrive on helping individuals and business owners grow their wealth while saving taxes along the way. We're talking about contributions to your retirement accounts. First, and I've covered this in other videos, but I always like to clarify difference between 401k and IRA. 401k is always a business sponsored plan, a business retirement account. IRA, individual retirement account, individual retirement accounts. So we can have both. Now, 401ks have their limits, and the limits just went up for 2026. In fact, if you are under 50, you can now put in $24,500 from your paycheck as an employee contribution to your 401k. Now, we can have traditional Roth buckets under there, and when we contribute through a 401k, income limits don't apply. So it doesn't matter if you make 10,000 or 10 million, you can still contribute up to those limits through your paycheck at your employer, whether you own your company or you're working for someone else. So that's the 401k limits under 50. If you're 50 or older, you have the ability to put in more. So there's a catch-up limit. So you can actually put in 2026 up to $32,500 into your 401k from your paycheck as your employee contribution, called a salary deferral. And if your employer has both traditional and Roth, you get to pick which bucket it goes into. So that's the 401k limits for 2026. Now let's talk about IRA. So IRA, again, individual retirement account. The limits for those in 2026 also went up. So instead of $7,000 last year, if you're under 50, you can now put in $7,500. Note that you are not crossing limits. So you can contribute to both your work 401k up to the limit and your IRA up to the limit. $7,500 for under 50, guess what? That goes up to $8,600 if you're 50. So with the current rules, if you're 50 or over, you have the ability to do a little bit more as a catch-up. So this encourages people who are maybe late in the game to kind of build more of their retirement account, but as they get closer to retirement. So just to clear up those rules, and they do not cross over. So if you do the 401k work, it does not prohibit you from doing the IRA contribution and vice versa. Now, one thing to note, where I talked about the 401k through work does not have income limits, the Roth IRA does have income limits. And so if you're above the income limit, you cannot directly contribute to a Roth IRA. You're just disqualified. Now, that's where the backdoor Roth comes in, where you can contribute the maximum into the traditional IRA account and then roll that over to the Roth. But just know this is a great time to work with your financial advisor, your CPA, because there can be some tax benefits to doing that. But if you have a large balance in a pre-tax IRA account, that conversion is maybe not going to be so tax beneficial because it's going to be prorated based on the amounts you have. So a kind of a clean backdoor Roth is when we have no pre-tax IRA money. Doesn't matter what you have in a 401k. And we do this contribution rollover to a Roth. That's the backdoor Roth conversion. And there's no income limits for that. So we can contribute again up to $7,500 to the traditional IRA in 2026 if you're under 50 and $8,600 if you're 50 or older. Now, whether you do the backdoor Roth, I never recommend doing that solo. Again, always recommend working with a tax pro, a wealth advisor, someone in your corner to make sure you're doing things right. Can get a little bit complicated if we're not doing it and recording it accurately. We don't want you to pay tax on anything you don't have to. We want the strategy to work for you. So hope this clarifies your question on whether you can do both 401k contributions and IRA contributions in the same year. If you like this video and found it helpful, ring the bell, follow my channel. I'm Julie Merrill, and I'll see you next time.